All right, what's up, traders? Welcome to today's Equity Empire Chart Analysis session. When most investors are throwing darts, we're looking for clues in the charts. Today, we're going to be taking a look at cloud software company for data analysis, Snowflake, symbol SNOW. And as usual, we're only going to be looking for two things. One, what's the direction of the trend? And two, are there support and resistance levels we can use for either a quick bounce trade or to get a lower entry price for a longer term position. So as we assess the trend, we'll notice that the highs are still heading higher. The lows are also heading higher. So on the weekly time frame, despite this sell-off in the last 3 weeks, Snowflake is still in an intermediate to longer term uptrend. So we're in an uptrend. We're now going to be looking for support levels for bounces, okay? So our first support level is right here, and we're getting pretty close to it. Our first support level is right here in the 228.63 to 213.88 price range. And there's another support level just below that. If we get a little more sell-off in software-related SaaS stocks, we might get a pullback down to 200. So 199.13 to 187.69 would be our second support level. And then if you think that there's going to be a massive sell-off in these stocks, and you're looking for a massive discount, there's another support level. I'm not even going to draw it down here. But if we go back to my video from several months ago, I found a support level that we actually did bounce off of in the April timeframe. Okay? We're going to focus on the ones that are a little nearer to current price because we're not going to be looking for such a long waiting period for our entry at this moment. You'll notice that we did actually bounce on Friday. We bounced off of the 228.63 support level. Now, that doesn't mean that the trade is done. The opportunity is missed. We can still get further selling into the green shaded area here. But the way to construct that trade, actually, before I construct the trade, I'm going to go find the first resistance level. So we've got two support levels, and then our first resistance level is going to be right here in the 268.69 to 284.58 price range. So you'll notice that price was rejected firmly out of that level. So we have to respect the fact that there still might be sellers lingering in that price range. So we can use that for a target, or we can just use no target at all and just be cognizant of the fact that there could be some sellers still existing in that price range, okay? So two ways to potentially construct a trade here. This is not financial advice. This is just a trading tutorial. But if you were looking to place a trade, one way to do it would be place a buy limit order at the top of the first support level, protective stop just below that level, target just in front of the first resistance level. And that trade setup right there has got a 2.41 to reward to risk ratio, okay? So in other words, for every $100 worth of risk you would take, you'd have $241 of reward potential. All right, now if you wanted to go for the more conservative entry in the lower support level, you place a buy limit order at 199.13, drag your protective stop just below that level, target in the same place. This one's going to have a much greater reward to risk. So this trade setup has a 5.19 to 1 reward to risk ratio, much greater reward to risk, okay? So if you want to be the aggressive trader, you can take a look at the first trade setup. A little more conservative entry has a much higher reward to risk ratio. You might not get filled. It may not pull back down to the 200 price range. But if you're patient and you are looking for better reward to risk ratios, oftentimes you can go for the lower support level. Okay, take the chance you don't get filled, but you'll have a higher reward to risk ratio when you do get filled. Okay, so now a couple other considerations here. We'll notice that the upper support level is just below. I'm going to draw it here just for the sake of, so we can see this breakout point. So there's our breakout point. Get black. There's our breakout point, the black dash line. So we have pulled back on Friday, this last week, we pulled back to the breakout point, and our support level is just below that breakout point. Now that's frequently, in a strong market, that's frequently the support level that works. Now we're definitely not in the same kind of strong market that we'd really like. We're more in a choppy general market environment, choppy to actually heading down. So we're in a bit of a correction. So in a corrective period, oftentimes you'll get a bigger pullback. So that's something to be aware of, okay? But regardless of which trade support level you want to go for, if any at all. The key would be to place a protective stop just below your level, as I said earlier. So our protective stop goes just below the support level, okay? So you enter. If it continues to drop, you don't want to hang on forever. You don't want to have a short-term trade turn into a long-term position just because you didn't have risk management discipline, okay? So we got a protective stop just below there. If you wanted to go for the lower support level, our protective stop would be the second red dashed line. So 2 support levels to consider and 1 resistance level to consider for a target in Snowflake. So let's wrap up the session. Hope you enjoyed the session, folks. I'll be back with more technical analysis later this week. In the meantime, wishing you all the best of luck in your trading and investing, and we'll see you soon.